The opinions expressed by Karen Scott Mims and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart, Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Well, we have an absolutely fabulous show for you today. Our show is entitled The New ROI, Reliability of Income in a Tax-Free World. So, I will start by saying, we are still in the midst of this healthcare pandemic. It is further exacerbated, of course, by the devastation of the economy. But with that in mind, there are still major decisions that not only require our attention, but demand that we continue to make educated, rational, deliberate, intentional, but not emotional decisions about managing our wealth. Because after all, we still believe in the concept of tax-free wealth and know that maximizing our assets and minimizing or lowering our tax liability is still our number one goal. So with that in mind, let me start off with 3 facts that I think we should consider. Number 1, tax-free wealth is far superior to the funds that you have in the tax-deferred bucket and the consequences, most importantly, of those funds. Fact number 2, tax-free wealth does not fear the decisions and consequences of a revenue-starved government because tax-free wealth is just as it says. It has a 0% tax consequence, and from a tax perspective, it simply won't apply to us what that revenue-starved government is doing. Fact number 3, tax-free wealth supports the notion of taking control over your finances, taking control over your wealth, and most importantly, taking control over that unhealthy partnership that you formed with Uncle Sam. You know, maybe about 30 or 40 years ago, when you were convinced to start putting money in that qualified employer plan, whether it was the 401k, the 403b, the 457, or the TSP, right? So here's the question, and I have 2 questions. Number 1, who knew that 35 years later, it would result in $1 million in the portfolio comprised solely of tax-inefficient mutual funds with a $400,000 and growing tax lien against it? Question number 2, who knew that 35 years later, when you thought that you had pulled one over on Uncle Sam, you would wake up and discover that not only did you have a partnership with Uncle Sam, but if you read the fine print of the contract, it actually allowed Uncle Sam to substitute your spouse, your children, and your grandchildren to act as your substitute. And Uncle Sam would thereafter continue the unwise and unhealthy partnership with them. In case you have just joined us, You, of course, are listening to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax strategist. And so our show for today is entitled The New ROI, Reliability of Income in a Tax-Free World. And so in case you're not sure of the path that I'm on, let me clarify that you're listening to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket, and that is where the 0% tax bracket and tax-free wealth intersect to create a tax-free, stress-free, but certainly not scot-free retirement. I'm Karen Scott Mims, and as I do each and every week, I am coaching and educating you up to and through retirement. So, before we introduce today's guest, I'd like to take a few moments and give you some background about why we do this, right? We do this and why perhaps our concept and our methodology is a little different. Well, I kind of believe that personal finance is something that you never understood and that you never had a course that was available for you to take. I still believe that taxation is extremely complex, and other than having that interaction every, January, February, March, or April, up until April 15th, you never really think about taxes. And unfortunately, the only person that has focused you in the least bit on taxes has been the person who does tax preparation and not tax planning. And so our approach, as I said, is a little different. We believe, right, in this academic advisory approach, we believe that, first of all, as a fiduciary, we are going to put your interest, right? Best interest of the client is the standard that we have to utilize. And then number two, we're going to take tax expertise, tax education, tax planning, tax advice, and tax strategy, put them all together, tax and wealth optimization. It's the path to the 0% tax bracket, and that's what you need to understand. So with that being said, let's talk about the 4 stages of wealth. So wealth accumulation, that's the stage where you're only concerned about growth and rate of return. You completely ignore taxes, right? You're concerned about return on investment. You completely ignore taxes. And then there's the wealth preservation stage. Quite the contrary. You are very concerned about taxes, and more importantly, you're concerned about preservation of principal. And then there's the wealth distribution stage and the wealth transfer stage. Let me also say that I would like to bring your attention, right, to the 4 tax buckets. Now, most people would say, oh my goodness, I know there are 3 tax buckets, taxable, tax deferred, and tax free. In reality, there are 4 tax buckets, right? Because taxable, tax deferred, and tax free, they refer to income tax, right? But in reality, the 4th tax bucket is a tax-free bucket. It also is concerned with tax-free income, but it's also concerned with having tax-free estate tax, right? Because I don't know whether you knew this, but 12 states and the District of Columbia actually have a state estate tax. And here in Maryland, right? And by the way, 6 states have an inheritance tax, and here in Maryland, we actually have both. So when we talk about the concept of zero is our hero, we do so because we're talking about a 0% income tax, a 0% capital gains tax, a 0% estate tax, a 0% excise tax, and a 0% inheritance tax. In case you have just joined us, you of course are listening to another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims, affectionately known as Your Tax ESQ. And so with that being said, let's introduce our guests for today. We have 2 couples. We have couple number 1, Sam and Susie. They are age 60. They have a balance sheet that looks a little something like this. They have a primary residence, fair market value $500,000, and they have debt service against that. They have a 401k that has $1 million of tax deferred money, of course. And then Sam also has a Roth IRA in which he has $50,000. Couple number 2, average Joe and Jane, right? Very similar. They too, on their balance sheet, have a primary residence of $500,000. There's debt service against it. They have a 401k that has about $1.3 million, and they have no Roth IRA funds. And so one of the things that they wanted to talk about, right, was this whole idea of ROI, not return of investment, like what they had thought in the accumulation stage. Now, as they're age 60 and they're 5 years away from retirement, they actually want to focus on ROI, meaning reliability of income. So one of the first things that we had to do with them is we had to sit down and redefine what was important, right? We had to ask them, what's your version of a successful retirement? Hopefully, it's a retirement that is, again, tax-free, stress-free, right? But certainly not scot-free. We had to ask them to define this concept of financial freedom. We had to then take that information and ask, what strategies, what assets are we going to use, right, in order to make them have that stable income? And by the way, when we talk about stable income, we're talking about the portion of the portfolio that's what I call a swan, right? Sleep well at night. It is going to produce stable income. It is going to produce stable income no matter what is going on in the economy. And so there can be as much volatility as the law would allow. They are still going to have stable, reliable income. Okay, so we ask these questions. What's their goal? How did they define financial freedom? What strategy and asset class? And oh, by the way, they said, Karen, we need it to be tax-free. Is that possible? Of course it is, right? This is all about tax-free wealth, but it's also about tax and wealth optimization. And what do I mean when I say that? I mean that not only do we have to make a single decision about one topic, right? We have to actually do something else. We have to look through our long-term lens, and we have to coordinate that decision that we make with all of the other areas of our wealth. So for instance, we can't just take the income plan alone. We have to coordinate it, right, with a tax, with an investment plan, with Social Security, with Medicare, with healthcare, with the estate plan, with a charitable and philanthropic giving plan. All of that has to be coordinated together. That is the idea of optimization. And certainly because we want tax-free wealth, it is the concept of adopting tax and wealth optimization. In case you have just joined us, you are listening to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket. I am your host, Karen Scott Mims. And as we prepare for break, we, of course, in the second half of the show, we're going to talk about the path that both Sam and Susie and Average Joe and Jane took in trying to achieve their goals. As you can imagine, for Sam and Susie, it went very well. For Average Joe and Jane, it did not go so well. And so we're going to talk about that. And we're going to talk about like what went wrong, right? Because this show is all about tax-free wealth. And more importantly, it's about taking the right path. It's about not only, right, education, it's about how you go about executing the plan. And let me say this, a portfolio is not a plan. And so just like we talked about a few minutes ago, you had to have a very intentional and deliberate path to the 0% tax bracket. It does not happen by accident. It does not happen without you first understanding that you need to have someone that has the tax expertise, that has the tax education that can be given to you in order to have tax planning, tax advice, and a tax strategy. It's all about tax strategic planning. And so in our last few minutes that we have for break, I will say to you, if you are sitting back and you are age 55 or older, right? Much like Sam and Susie and Average Joe and Jane, if you've kind of discovered that you are more concerned with safety and preservation of principal, that's important to you, and you've decided that it's time for tax-free wealth, you can give us a call. The number is 866-621-6660. Again, that number is 866-621-6660. One of the things that we'll start by doing is having a simple tax-free wealth review, okay? The other thing that I would kind of urge you to do is to attend and join us at a seminar. Our seminar is entitled Tax-Free Wealth Through the 4 Phases of Retirement. So if you'd like to join us for that, you can either dial 866-621-6660. If it's easier to send us a text message, certainly do that by texting the word tax to 301-900-5758. And if it's easier for you to send an email to seminar@taxsmarttaxzero.com. So let me say this in the few moments that we have left before we go to break. We have some more information, certainly, that we're going to impart to you in that second half, right, of the show. But I will say to you, one of the key things that both couples had to realize is that when you get into the preservation stage, it's about keeping what you've accumulated and having a modest return, right? Maybe that might be 5%, maybe it's 7%, maybe it's 10%. But one of the things you're not going to do, you are not going to risk losing 50% in order to have a 24% return. Because can I tell you something? The easiest way to get a 24% return is to get the heck out of the 24% tax bracket. In case you had just joined us, you of course are listening to another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax strategist. Don't go anywhere. We'll be right back.
Of all the questions you get asked every day, this is one you shouldn't ignore. How much money in your 401k or IRA is actually yours? Not what its current value is, but how much of it will end up in your pockets, not the government's. Remember, you still might owe taxes on that money. And how about tax efficiency? Are you overpaying, or are you keeping every dollar you're entitled to? Look, I know it's confusing, it's complicated, and it definitely isn't fun. That's why Harbor Point Wealth Management works to help make sure you aren't paying more in taxes than your fair share. They have a complimentary report to help make sense of taxes and how they can impact your retirement. Get it today. It's your money. You deserve to know what's at stake. Don't do the IRS any favors. Get your complimentary tax report from Karen Scott Mims and Harbor Point Wealth Management today. Just text the word tax to 301-900-5758. That's the word tax. Text it to 301-900-5758. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Welcome to the second half of our show, another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims, and our show for today is entitled The New ROI, Reliability of Income in a Tax-Free World. Well, in the second half of the show, you know I like to call this Tax Liabilities and Loopholes. It's really about how to legally, ethically, and morally divorce Uncle Sam as the primary beneficiary of your 401k, 403b, 457, or TSP thrift savings plan if you're a federal government employee. It's really about how to legally, ethically, and morally enter the path of the 0% tax bracket and embrace this concept we call tax-free wealth. Now, earlier, we introduced you to two couples. They were both age 60, right? Both couples age 60. They both had 5 years until retirement. Couple number one, Sam and Susie, they had $1 million in their 401k. Couple number two, Average Joe and Jane, they had $1.3 million in their 401k, no Roth IRA money. Of course, remember, Sam and Susie had a tiny bit of Roth IRA money. But both couples are both couples are age 60. They have 5 years until retirement. And one of the things that we sat down with them and discussed was, right, defining the idea of financial freedom. What does that definition mean to them? Considering a SWAN portfolio. SWAN, of course, stands for Sleep Well at Night. They both agreed that they had, under normal circumstances in the accumulation stage, they had to work for their money. Now it was about having their money work for them. They firmly agreed that in the accumulation stage, they had adopted this concept of ROI, meaning return on investment. Here in the preservation stage, though, it was about ROI, standing for reliability of income. And oh, by the way, they both said they were embracing the concept of zero is my hero, the 0% tax bracket. And of course, when we say that, we talk about a 0% income tax bracket, a 0% capital gains tax, 0% estate tax, 0% excise tax, and 0% inheritance tax. In case you have just joined us, yep, it's another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims, affectionately known as your Tax ESQ. I am educating and coaching you up to and through retirement, and I'm doing so in a manner of tax-free wealth. That is what this show is about. That's our goal for each and every person out there listening. It's about tax-free wealth. So, our two couples, they had similar portfolios. They had, kind of that aggressive mutual fund kind of portfolio that you have in the accumulation stage, whereby you sign up for the whole idea that your returns could either be between, the range of -40 to +40, the kind that makes you terrified to open up your statement. Yeah, that sounds familiar for these last few months for these couples. They had similar goals. They both wanted to adopt this safety first approach to some portion of their portfolio. Quite frankly, if you had talked to Susie, she might say for all of the portfolio. And so they all understood this idea of preservation of principal above return. So in other words, they would prefer having a bucket of money in which they could not lose anything, but maybe their return might be 5, 7, 10%, right? But the bottom line is that return was fixed, it was stable, it was not subject to the fluctuations and the roller coaster and the volatility of the stock market. It happened no matter what. That is what we call mailbox money, and that is exactly what each of these couples wanted to have. By the way, most importantly, they wanted to have some tax diversification, meaning that instead of having all of that money be tax deferred, they were like, hey, Karen, is there any way we could move all of that money to the tax-free bucket? Absolutely. Okay. So we have two couples with the same goals, drastically different results. And you might say, how could that have happened? I have two answers to that. Number one, apparently, one of them did not understand the concept of strategic tax-free wealth, right? Because it is recognizing that they need guidance, that they need to have someone that has the tax expertise that will then follow the tax expertise with tax education, tax planning, tax advice, and a tax strategy that will get them on the path to the 0% tax bracket. The other thing that I would say is that they didn't understand sequence of returns. And sequence of returns is the concept that while in the accumulation stage, you might not have cared what order, the losses and the gains happened. But definitely, if you're in the preservation stage, oh my gosh, that is key. Okay, let me give you a quick example. Couple number one, Sam and Susie. Let's just even take $500,000 of the portfolio, a 6% rate of return. They want to withdraw $30,000. We'll give them a raise each year. We'll index that by 2% for inflation. At the end of the 30 years, they still have nearly $2 million in assets. Okay, that's taking the preservation of principal safety approach. Okay, for just a portion of the portfolio. Average Joe and Jane, they too had $500,000, a 6% rate of return. They withdrew $30,000. We gave them a raise each year, indexed it for inflation by 2%. At the end of the 30 years, they barely had $30,000. Can I suggest to you two very important statements? Number one, sequence of returns matters. Number two, taxes matter. Okay? Hey, can I just throw in there, what if Sam and Susie had taken it one step further and implemented tax planning, right? Since one of their goals was tax-free wealth, they could have easily had nearly double the money that they already had. Average Joe and Jane, they thought the idea was to master checkers, okay? They kind of, thought this whole idea of having a plan was not something they were willing to sit down and think was important, right? And so there has to be a plan. There has to be a roadmap. We like to call it retirement roadmap. When you don't have a plan, you tend to go anywhere except, where you're supposed to go. Without a plan, you tend to go where the government-sponsored plan, i.e. the 401k from the revenue-starved government, is leading you. It's about time, and take the approach that, quite frankly, Sam and Susie, they wanted to take control over their wealth, take control over their life, and most of all, they wanted to take control by having, tax-free wealth. In case you have just joined us, you of course are listening to another episode of Tax Smart Tax Zero. I'm your host, Karen Scott Mims, tax attorney, registered investment advisor, representative, accountant, estate planner, and certainly my favorite role, private wealth and tax strategist. Our show for today is entitled The New ROI, Reliability of Income in a Tax-Free World. Can I say this in the last few moments that we have left? You can't transition into a different stage of wealth and expect to keep the same mindset, right? And the same kind of portfolio, that aggressive mutual fund portfolio that, by the way, is tax inefficient and requires you to take a lot of risk as you are chasing those large returns. If you're needing income from the portfolio, let's use that income to maintain your standard of living. Let's make sure that it's mailbox money, that it's stable, it's safe, it has nothing to do, right, with the fluctuations and the volatility of the stock market. And let me say this, tax-free wealth begins with tax-free income. Let's not lose sight of that, right? Because when you focus on everything else except tax-free wealth, it seems to be this concept that you don't really understand the difference between wealth and what goes on the 1040, right? Tax planning, of course, is something we do 365 days of the year. And let me put it to you like this. It seemed that both couples were running My Wealth LLC, right? One was doing a good job of it, one was not. Trying to, manage your wealth. Let me say this, you can't manage what you don't understand. You have to have, an education, and that education comes because you are working with and understanding someone who has that same philosophy. As fiduciaries, we do. As a fiduciary firm, then we are putting the best interests of the client forward, but most importantly, we're taking the approach that you need to be educated. Tax education, tax planning, not something you learned in school, unfortunately, but something you very much need to implement in your life. So in the last few minutes, I'll say that up until now, our two couples, you have taken the approach that Uncle Sam needs to be totally in your business. He needs to know every single form of wealth, every single asset, every single dollar, every single benefit. He needs to know about it, and it needs to go on the 1040. Can I make a suggestion? So while I agree with the basic premise that a 1040 in most cases needs to be submitted, I would say to you the whole thing that you are missing, that average Joe and Jane were missing, is that wealth needs to be in a form that is reportable sometimes on the income tax return, but most often is not, right? It's not what you make, it's what you get to keep. And what you get to keep should go in your pocket, but should not go on the 1040. If you could just understand and embrace that concept, trust me, you too would be on the path to zero is my hero, the path to the 0% tax bracket. So let me repeat that. Up until now, you've kind of taken the approach, Uncle Sam needs to know everything. No, Uncle Sam needs to know the income that has to go on the 1040. There's a whole separate bucket over here of income that does not need to go on the 1040. It needs to go in your pocket and not on the 1040. Oh, golly Wally, where does the time go? I am so glad that you've taken the time to listen to another episode of the Tax Efficient Retirement Planning Show, Tax Smart Tax Zero. My name is Karen Scott Mims. I would say to you, in the last few minutes, I would say, let's take some time and have a tax-free wealth review. Give us a call. The number is 866-621-6660. If you would like to attend our seminar, which I think would be a great idea, our seminar is entitled Tax-Free Wealth Through the 4 Phases of Retirement. You can either give us a call. The number is 866-621-6660. If it's easier for you to send us a text message, you may text the word tax, T-A-X, to 301-900-5758. Or if you want to send an email, send us an email, seminar@taxsmarttaxzero.com. I once again say that while we are taking the time to think about our wealth, you can't manage what you don't understand. This is a show about tax-free wealth. It's a show about the path to the 0% tax bracket, and it's a show about having a 0% tax, 0% income, capital gains, estate, excise, and inheritance tax. Once again, our number here is 866-621-6660. Thank you so much for joining. Barbara, if you've joined us, get back to work.
This concludes another episode of the Tax Smart Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or text the word TAX to 301-900-5758 or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Text the word seminar to 301-900-5758. Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook, and as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart Tax Zero, the path to the 0% tax bracket.